What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
Hello and welcome to Precision Value Trading, and thank you for joining me today as we run through the weekly fundamental and technical analysis for the Forex markets. The date is the 29th of March, so let's get started. So firstly, we'll just quickly run through the fundamental chart that I use, and this basically has all the main macroeconomic data points for the countries, and what the chart does is add them all together and basically give out who's the best and who's the worst at this point. So we'll quickly run through this. I understand that this might be quite confusing to people, especially if you're new to fundamental analysis, because there's a lot of numbers here and a lot of different colours and it can be quite complicated. But basically, in layman's terms, this bottom part is exactly the same as this top part. This is the previous position, and this top bit is obviously the current position. Don't know what I did there. Did I move something there? Oh no, sorry about that. Anyway, so we'll just run through the rank. So this is the rank here. United States is number 1, United Kingdom number 2, we have Australia at number 3, Canada at number 4, Japan at number 5, with New Zealand, which is strange, but I'll expand on this. The Eurozone at number 8, and Switzerland at number 7. Now, at the minute, guys, the fundamentals have taken a slight backseat because of the tariffs. So usually in a risk-on environment, when there aren't any political events happening, which I know might seem like it's always political at the minute with Trump in charge, because basically the tariffs are taking over a little bit the fundamentals. If a few of you were trading a couple of weeks ago, you'll know that we had a massive move in the euro. I'll actually just show this now, just quickly. So we had this massive move up, and huge move up. It's about a 500 pip move on the euro dollar. However, at the same time, on the fundamental chart, the eurozone is only an 8, which is actually last, as you can see here. So what's that about? Well, I'm trying to keep it as brief and simple as possible, because I want these weekly analysis videos to be digestible and quite easy to understand. I don't want to go too in depth, because it is quite hard to get that across in a video. You need to sort of learn it for yourself from the fundamentals. Over time, it takes years of experience, to be fair. But I'll try and explain it. So Eurozone is number 8. Its GDP's not the best. It's not the worst either. I mean, New Zealand have a minus GDP at the minute. And New Zealand actually only just got out of a recession recently. That was a recent 0.7 quarter-on-quarter GDP data release that they had last week, I think. So they're not doing the worst GDP-wise. They're doing the worst quarter-on-quarter for GDP, but they're not in a recession. Interest rate-wise, they are low. They are low again. Inflation rate is low. Well, lowish. They're still above the 2% central bank target, but when you compare them to the other countries, 2.3 compared to Japan's 3.7, it's low. and that's what you're looking for in trading. You're looking for divergences. Excuse me. Inflation month on month for the euro, 0.4, which is sort of a middle ground really. You got core inflation. Unemployment is high as well. So these numbers aren't great for the euro. Manufacturing PMI is below 50. Services not too bad, and the wage growth is sort of middle road. It's number 4. So the eurozone at the minute is number 8 data wise. However, this chart is more of it's sort of like a north star to sort of get your bearings, but with fundamental analysis, the markets are forward thinking, that they look to the future. So basically, if a currency or a country is number 8, like the euro at the minute, that sort of means that it's on the cheap side, because markets have been sort of selling that country for a while. Now this is where there's a lot of nuance involved in trading. Sometimes you can get a country that's number 8, so you know the data's really bad. Maybe inflation's coming down, the central bank are cutting, GDP's falling, and that currency will be a sell for possibly the full year, and you can make money on that. So this is where the nuance comes in. You've got to keep looking at the analysis from the central banks and the experts and the economic releases, because there is a point when everything moves in cycles. So there is a point when a country can't really go any lower, and it starts to in the cycle it starts to move back up, and that's sort of what we're having with the euro at the minute. The numbers aren't great for the euro, and as you know, well, as some of you know, if you're new to fundamentals, currencies move on interest rates and inflation, and basically what the central banks are doing. So if a country has low GDP, inflation's falling below the 2% target, all central banks have a 2% target, they will want to lower interest rates to try and stimulate the economy. And lower interest rates basically means a lower return on investments, which is why people sell the currency to buy into a currency that has a higher interest rate, which is called the carry trade. But anyway, I'm getting a bit lost in the weeds with this. Basically, all I'm trying to say is that with fundamentals, this chart, it has to be taken with a pinch of salt, because of the situation with the euro basically. Now this chart works most of the time, and there are times when you've got to sort of, like for the tariff for example. Another example, and this is why it's been hard to trade recently as well, but specifically this last week, before we've got tariffs next week, it's been quite difficult to trade for me, who's a fundamental trader, because of the tariffs. As you can see, again, I don't want to spend too long on this. I've already spent too long on explaining the euro situation, but United States is number 1. However, I'll go to the chart again. If we go to the DXY, the United States has taken quite a massive fall actually, and this was along with the euro gaining strength as well, due to the fiscal investment that the euro announced. Sorry, I didn't even mention that. The reason the euro went up last week, or the last few weeks, is because obviously the government announced that they were going to do something to the constitution or something, which allowed them to release a bunch more money, which basically, to me, it sounds like they've just made it up out of thin air. They've basically said they're going to be able to print a bunch more money to invest into, military infrastructure and invest into many other places in the eurozone, which basically means more money being pumped into the eurozone economy, which was good for the euro. And then at the same time, people were talking about how these tariffs for America, in the short term at least, could potentially be a negative on the American economy, which is logical really, because companies in America are going to have to maybe put up their prices because they are going to have to pay more to import foreign goods, because Trump wants to bring production and he wants to put American products first, but that will have teething problems. So anyway, United States is number one on the fundamental chart. If we go through everything, look, number one GDP for quarter on quarter and for year on year for United States. It's got the highest interest rate along with the United Kingdom. Its inflation is number two at 2.8, only being beaten by Japan. Inflation rate is actually quite low for month on month, but if you can look at all these data points, core inflation year on year, unemployment's quite low as well. It's doing all right. The economy is doing good, and that's why it's number one. But the market is forward thinking again, so, and the market also doesn't like uncertainty, so that's why the dollar has taken such a big fall recently, along with other things, but I don't want to get too into it. But anyway, so that's the fundamental charts for this week. As you can see, it doesn't really mean much this week because the numbers say one thing but the charts are saying another, and that's why I just wanted to explain that a little bit. I hope I explained it well. It does get quite confusing, but people who've been trading fundamentals for a while understand that it's very hard to communicate the nuance with fundamental trading, because it's a buy the rumor sell the fact situation. The market will, something will come out in the news, it'll be the rumor, and then what the markets will do is look at the chart. If it's cheap, the market, or expensive, the market will start to sell and buy based on that rumor. And then give it a few weeks, when the data actually comes out, that's when the markets will actually take profit. So then the data will come out, say some positive data for America or something, and then the charts will go the opposite way, and people are like, what is going on? Fundamentals don't work. You know, I've just bought the dollar when it's had a positive news release, and the dollar's going down. What's going on? Well, that's because the money's already been made 2 weeks ago when the big institutions bought on the rumor. So that's basically what's going on at the minute. So that's the fundamental chart. We're just going to move on now to the data releases for next week. So I use Trading Economics, which is a brilliant website. I also use Forex Factory sometimes, because Forex Factory does sometimes have some things on there that Trading Economics doesn't have, like for example, when Trump's giving a speech on something, sometimes Forex Factory has that instead of Trading Economics. But Trading Economics is my main go-to for data releases. So, and like I was saying, next week the main event is the tariffs. So a lot of these data releases might not move the markets, even though they are important and we should pay attention to them. They might not have as much impact as they usually do. So Monday we've got inflation for Germany, and we've got unemployment for Japan, with a few others. Tuesday we have the Australian interest rate decision, which is expected to hold interest rates. What else do we have? We've got inflation readings for the Eurozone, which is looking like another fall in inflation. And we've got unemployment as again, which is looking to stay similar. Job openings for America, ISM manufacturing. Wednesday, we don't have much Wednesday. ADP employment change, which sometimes gives an indication of the NFP on Friday. Thursday, not too much. ISM services PMI sometimes has an impact. Initial jobless claims as well. And then Friday, we've got non-farm payrolls for USA, unemployment rate for Switzerland, and we have unemployment rate for Canada. So we've got quite a bit next week. What I'm hoping for is after Wednesday, when the tariff news gets released, the dust settles, countries know what they're doing, hopefully fundamentals will come back into play and we can start to have easier trades. Because I actually read some analysis last week. Who was it who said this? Brent Donnelly, who wrote the book The Art of Currency Trading. Really good book on Forex trading. He was a professional trader, and Brent Donnelly actually said tariffs are untradeable. So even he is struggling to trade at the minute. So yeah, it's been difficult. It's just because of the uncertainty, guys. There's so much uncertainty in the market. And like I said, when the tariffs get gone and we come back to fundamentals and we can trade on weak versus strong, which countries are doing well, which countries aren't doing well, that's when it's really not easy, but well, it can be easy to trade then. So that's why we're sitting on our hands this week. Right, anyway, that's mainly I'll quickly run through this as well. So FX weekly for MUFG. So the US dollar has weakened against most G10 currencies this week, but for most currencies the moves have been contained ahead of the key risk event next week. So yeah, these guys are saying it as well. So the reciprocal tariff announcements on the 2nd of April. Yes, that is Wednesday. There has been a clear pattern of less and less market reaction to Trump tariff announcements, but this may simply reflect the difficulty trading the announcements given the uncertainty over the longevity of the announcements. There is also, we believe, a degree of optimism over the scale of tariffs, with expectations of exemptions and carve-outs diluting the negative macro impact. However, we see a chance of very broad-based tariffs with more aggressive action on countries with which the US runs larger trade deficits. G10 central bank rate expectations could well adjust to price more cuts that would help propel the dollar stronger for a period. So yes, this is basically all about how the tariffs are going to turn out. If the tariffs turn out really bad for Europe, that could be obviously positive for the dollar. We could get some decent sells in the euro USD. But we just have to wait and see. It's one of those periods in trading where you just have to sort of sit on your hands, and you've got to think as well, do you really want to risk your money when you have an announcement like this coming? I remember last time actually I was in a trade, and I closed all my trades on the Friday, and they were profitable, but I closed them because I was worried that the markets were going to gap, which they did, and they actually gapped in my favour. I think I was in an oil trade as well. And I think I was in an oil trade, and I can't remember what the other trade I was in, maybe possibly NZD, USD, but they all gapped in my favour, and I would have actually made quite a bit more money, but I wanted to cash out because it is a risk. It is a risk, guys. So you've always got to think, if you're trading for your own money, and maybe you just don't want to risk your capital. You want to be risk averse when you're trading. But anyway, I'm not going to read all this, but if you want to find, this is a really good website, MUFG, they are a bank, and you can find their weekly analysis on their website. But they're just basically saying the same thing. They are in wait and see mode basically until next week. So moving on to the charts, and we'll run through these quickly. So DXY, we are in a demand zone at the minute. Just zoom in here. You can see this made a low here, but then prices moved up, meaning there is some demand here. It's not really the best demand zone, but really I'd probably prefer prices to come down to here, and then we can make a move up if you are a buyer of the dollar. But yeah, like I said, we're in wait and see mode. So I personally am going to be waiting till Wednesday before I make any trades. So that is that. That's the dollar index as well. So yeah, the dollar index, and this is slightly different to the DXY. This is the DXY obviously, and this doesn't include all currencies. This is the equally weighted dollar index. So this is slightly better, to be fair. So as you can see, we're actually in a supply zone on the equally weighted dollar index. So really, you want to wait till down here to buy the dollar. What could happen on Wednesday, which would be a decent setup, what you could see happening Monday, Tuesday, prices could start to fade down here, and then what could happen is we get the release of the tariffs, and then if price is down here and the tariff news comes out positive for the dollar, there could be some potential setups to buy the dollar, and you could see maybe a little stop hunt here, or prices could just go, you know, higher. So that would be nice if prices can get down there. Moving on to the euro. So last week the euro actually came into this demand zone here, which was actually a really nice demand zone. You can see it moved up. This was when the fiscal stimulus was announced, so it moved up, moved down here, and then made another move higher, creating the demand zone here. There's a bit of support and resistance here. You can actually see it's bounced off there, here. So yeah, it's a bit of a level here. So prices actually moved down into this level here, and you can see prices have reacted. There's been buyers here. This is deemed cheap for the euro, which did actually result in the euro USD going up like that there. But there were some setups. There were some setups on euro NZD, and there was a bit of a setup on euro Swiss franc. But yeah, that euro NZD trade, there's quite a nice fundamental divergence on euro NZD at the minute, and I didn't take the trade because basically what I've been saying, it's too uncertain at the minute, and I should have really taken the trade because it ended up as a winner. But like I said before, you have to be risk averse in the market, and yeah, sometimes it's just not worth. Sometimes it's just easier just to sit on your hands and watch. But that's the euro anyway. As you can see on the RSI as well, we're a bit expensive now. What we want to see happen is move back into here and then move back up to there. And actually it has made another supply zone there, because what you can see here, see when it spikes above the previous candle like that, but then goes all the way down here, so prices have come up and then pushed all the way back down here, proving that there is supply at these prices on this spike here. It's called hidden supply, that. But yeah, that's the euro. And a lot of these pairs, guys, like I keep saying, we are doing the technical analysis and we are doing the fundamental analysis, but until these tariffs come out, it's sort of pointless really. But it's just good to get in good habits and do them every day really. So this is the pound. Now fundamentally the pound is doing all right as well. We just go back to the fundamental charts. You can see it's number 2. We had the spring budget come out last week, which I was expecting a big sell-off in the pound, to be honest, but markets didn't really react in the way that I thought they were going to, which signals to me that the pound is actually quite strong. Fundamentally it's quite strong. The chart says it's number 2. GDP wise it's not doing well. You know, there's there's low growth in GDP quarter on quarter, but interest rate wise, inflation rate wise, it is very strong, which is strong for the currency, but high inflation, interest rates, but low GDP in real terms isn't really great for the people, because it means there's low growth but prices are going higher and interest rates are going higher, which is stagflation. So in real terms, it's not looking great for the pound and the country, but from a currency perspective, the pound does seem strong at the minute, and you can see that in the index here. It's been just making new highs. So yeah, the pound is a tricky one at the minute as well. So we are at the highs at the minute. So if you're looking for sells, now is probably a good time to sell the pound. If you're looking for buys on the pound, you're probably going to wait until it gets down here, and then you can look to trade this range here. So moving on to the CAD. So yeah, last week the CAD actually moved up to this sort of level here and sold off. There aren't any more demand zones to draw, but yeah, if you're looking for buys on the CAD, you probably want to see it come down to this demand zone here. And sells, again, you're probably wanting to look for something up here, or even up here to this. This is quite a nice demand zone here. Put that all the way down to there. But yeah, the CAD, again, it's a tricky one at the minute, because the tariffs are going to affect the CAD as well, because they are one of the biggest trading partners with America. So yeah, we just have to wait and see for Wednesday. So Australia, as you can see, we're sort of at these lows on the Australian index. But again, in a usual circumstance, I remember a few months ago, possibly just after Christmas or just before Christmas, the Australian dollar was actually a buy against certain currencies. But because of these tariffs, and they are sort of starting to cut interest rates now, I think the Australian dollar is actually a sell until it gets any better news. Got to think as well, Australian dollar, New Zealand dollar are big trading partners with China, and America putting a lot of tariffs on China, because obviously they are the two biggest countries in the world, economically anyway. So they are sort of going at it at the minute to try and get their trade deals sorted, and Trump's trying to get better trade deals, etc. So when China suffers, Australia and New Zealand do also suffer. So that's also why we watch the US Chinese yuan index here as well. Where are we at? Yeah. So yeah, Australian dollar. It's another tricky one. It is another tricky one because of these tariffs, but we're out at the lows. If you're wanting to sell, which I do, you're probably going to want to wait for it to get up here, up to this supply zone here, and then you can trade this range. So we will watch how that plays out this week. New Zealand dollar. So we have made a new supply zone on the New Zealand dollar index just here. As you can see, prices have moved down, moved up, and then we've made a new low here. And then there's that bit of support and resistance there as well. A little bit. You can see it sort of resisted. There's that support here. Support. Oh, it's not the cleanest level, but it does look like a level. You can see it's sort of bounced off it here as well a little bit. New Zealand dollar as well, like I said before, it's in the same basket as Australian dollar. We are on the expensive side on the RSI, so we're waiting for pullbacks potentially into here, and then we can sell the NZD. The NZD as well, it has it has obviously the tariffs going against it, the tariff uncertainty, but it also has fundamentally wise, the data isn't great for the New Zealand dollar, and it's actually moved up 2 places recently. I think probably because of its GDP. It did have a 0.7 GDP quarter-on-quarter reading from the last data release last week, which has put it in number 2 for GDP growth, but that is only because it was in negative GDP growth before, so it was in a recession. Technically it was technically in a recession last quarter, so it's not doing great. Inflation rate wise, it's close to the 2% target, so that's good for the regular people, and the central bank will want to keep cutting interest rates to get that inflation rate down again, so it gets closer to the 2% target. So New Zealand dollar has fundamentally things going against it, but it also has the tariffs, so that's why the New Zealand dollar has been a big sell for the last few months, and we have made some money off that, selling against the yen, the dollar, and that's really it. I've been just selling NZD, JPY for the last few months. Moving on to the Swiss franc. So the Swiss franc is inexpensive territory on the RSI. It's coming up to this level here. Did it break this supply? No, it didn't. It's very choppy at the minute. Very choppy. It's fundamentally, the Swiss franc is a sell. They have been cutting a lot. They are almost down to 0 interest rates. Here we are. So they are at 0.25 interest rates. So if you look at a currency like Swiss franc, and then you look at a currency like the US dollar at 4.5% interest rates, that is a strong carry trade. I'll quickly just show you USD Swiss franc, but because of the other stuff that's happening in the markets at the minute, we've not been getting actually a move up on the US dollar Swiss franc. But to me, the Swiss franc is a sell. Fundamentally, it's one of the worst at the minute. The central bank has said they've stopped cutting rates, which could be a bit of an improvement. People could start to unwind their Swiss franc trades, but that carry trade is quite strong, and we saw that with the JPY the last few years. The yen had negative interest rates, which meant that most currencies with a yen in the cross were just trending against the yen. You can see it here. This is the Australian yen, just moving up. This is the US dollar yen. It's just a massive uptrend. What else have we got? Not NZD yen, pound yen. Yeah, just sort of been moving slowly up since 2020. But yeah, mainly USD yen really has had a nice uptrend for quite a while. But yeah, so that's the Swiss franc anyway. I think that's going to be a sell for quite a while now, just simply because of the low interest rates. The one thing to bear in mind though, guys, is risk on and risk off. So when risk off comes into the market, obviously we have our safe haven currencies that money flows into. Traditional safe havens of the yen, the Swiss franc and the dollar. So that is something to bear in mind, and that is probably why we're getting these choppy moves on the Swiss franc index, because fundamentally, it's a sell, but with this tariff uncertainty and other various things that are coming into the market recently that are causing markets to be a bit fearful and a bit risk averse, that is probably what's giving the Swiss franc some strength. So yeah, so finally we're on to the Japanese yen. So Japanese yen has had a bit of a pullback recently, and it's been choppy as well. We've made quite a good amount of money on the yen recently from buying the yen, because obviously their central bank is starting to hike rates. There aren't any new demand or supply zones to create here. Just possibly a bit of a level there. But these indexes are quite rough. We don't really trade off these indexes. We use them as confluence to time our trades in the pairs. So when, say for example, the index is in demand or cheap, that's when we look to, if say for example we want to trade the Swiss franc yen, we want the Swiss franc index to be expensive and we want the yen to be cheap. So that's all we use them for, really. But yeah, the yen is a buy at the minute fundamentally, and it's also a buy from risk off as well. So the yen's got a lot going for it at the minute. But yeah, that's the indexes. What are we on to now? So yeah, moving through to the pairs. Dollar, euro dollar. We have made a new demand zone here. Probably draw that like that there. And probably draw a level of support like that. See if that moves across. Yeah, it does. That's quite a nice level actually. You can see it sort of bounced off there. It's acted as resistance there. Support. Looks like a bit of a stop on there. Keeps going. Yeah, you can see resistance, support, resistance. So this is quite a strong level. And when you have a strong level with a demand zone, that's quite a good place to buy. So next week I will be looking for, if prices come down to here and we get news on the tariff that is actually negative for the dollar, and say for example it comes out and the eurozone has sort of been let off a little bit, maybe Trump said we're not going to put that many tariffs on euro, we've come to sort of maybe we're going to come to sort of some sort of deal. This would be quite a nice buy here, and then we could potentially ride that up to the top there. Not the strongest demand zone because it's only moved, it's only moved less than 70 pips. So, but I just think that the divergence at the minute is on these tariffs. So if we get that sort of situation, or if Monday, Tuesday we move up to here and the tariffs are the opposite way around and it's good for the dollar, really bad for Europe, that could be a nice short there. That could be a nice short. The only thing I'd say with that is this supply zone here, very strong supply zone. You can see how much supply that was. I think actually this was the supply zone that was created when Donald Trump became president. I think was that the 5th of November. Could be. So the only thing I'd say about this supply zone, guys, is it's been touched. It's sort of come up there once, twice, 3 times. So this will be the 4th touch, which isn't great. You want to sort of get involved in these supply and demand zones first or second touch, really, at a minimum. But yeah, so euro pound, we did make a new demand zone here. It actually looks a bit like a stop hunt. Bit of a stop hunt there. No, it's not actually. I only went down 3 pips. But if we can just move that down to there, that's quite a strong level as well. A lot of analysis recently has said that the euro pound is actually a sell, and mainly because of the tariffs. So a lot of people have been saying that the pound is actually well insulated against these tariffs, whereas the eurozone isn't. So if that is the case, you know, this could be a nice trade. If it edges up to here, we could get a nice trade down to this zone here. But yeah, I'm probably boring you now talking about these tariffs. In every analysis that I'm doing is just bringing it back to these tariffs. But honestly, it is, and it's annoying for me because I'm sick of them as well. But we've got to wait for Wednesday, and then once Wednesday's out of the way, hopefully we can trade on the fundamentals again, back to normal. So yeah, pound dollar again. Not really a fan of this pair at the minute. Not really the strongest divergence. Are there any new zones to draw? No, they're not. So I'm just going to move on from this one. Dollar CAD. Nothing really. No new zones created. Last week we sort of came into this demand zone and moved higher a little bit. We did have some data for Canada last week, which was it the... I'm sure there was some positive data for Canada last week. Was it GDP? Oh, that was it, yeah, GDP month on month. It was a slightly higher than expected, but not by much really. No, nothing to write home about. But yeah. Dollar yen. Now, dollar yen, there was actually a setup on this pair last week, which again, it's annoying. I would have probably gone for it if it wasn't for these tariffs. It was on a short side. It was up here. So we had... It's actually a perfect entry. We had a nice outside candle, entry candle here. And then what I usually like to do is set a pending order at the 50% retracement of this candle. And as you can see, prices came up perfectly. I would have got triggered in, and then it went down. That would have been a lovely trade to have on a Friday afternoon. That would have been really nice. But because of these bloody tariffs again, I was thinking, do I really want to get involved in a dollar trade when there are tariffs coming out next week, which could go either way for the dollar? So again, it's just about being risk averse. You've got to think, if I'm trading, say, you got to put yourself in the shoes of, you know, imagine you were trading for a bank or something with potentially even, you know, £100 million on a position. You've got to think, are you going to walk into your boss's office the next morning and go, well, it was a setup, so I went for it, but your boss is going to say, we've got tariff news next week, which is a potential market moving event, and you're trying to speculate and get in early. So you've just got to sort of think that way a little bit sometimes and be a bit risk averse. Now, the trade would have worked out, and if you would have done that trade, you know, your boss probably would have called you a genius. So it's hindsight bias. But yeah, there was a nice move on that pair last week, which would have been nice, but we didn't lose any money anyway, so that's the main thing. We are now in this demand zone. Again, it's not the nicest demand zone. Prices have only moved up. They've moved up a fair 140 pips. So again, guys, if we get the news and it's negative for the dollar, sorry, positive for the dollar, this could be a nice buy. However, to be fair, I don't really want to buy the dollar against the yen actually, because the yen is hiking. It's in its hiking cycle, and it is strong. So yeah, I'm going to leave that one. But yeah, nothing new on this pair. USD Swiss franc. So we're in a tight range at the minute. ideally what we want to see next week again is prices come down into here and then get a buy on the dollar on the tariff news. However, again, if you look at this demand zone, it's been touched once, twice. This will be the third touch now, guys, so not the best. Probably want prices to move down to this lower demand zone here. See this demand zone here? This demand zone hasn't been touched at all. So if prices can move down to here, which is a big ask to be fair, because that is around 100 pips or something, about 90 pips, but that would be a nice trade. Don't think prices are going to get this low before Wednesday, but we'll see. That's USD, Swiss franc anyway. Alright, Australian dollar, US dollar, again we're in this tight range. No nice setups really, and again the pair isn't the greatest until Wednesday. Australian dollar is one of the currencies that will not benefit from high tariffs on China and high tariffs on Australian dollar products, so we'll wait and see for that. If we do get positive dollar news, what we could see potentially a move up to there and then a sell to the bottom of this range. But again, this supply zone, once, twice, it'll be the third touch, so not the greatest pair at the minute to trade, to be honest. NZD USD again, this is a pair I'm looking to trade if we get the right news on the tariffs. We did sell off last week up here, and we did create a new supply zone, so if we can get up there, that would be a nice sell on the NZD USD. But there's a fair jump again, 110 pips to the upside. Can I see New Zealand dollar getting up there? Potentially before Wednesday, maybe not, but we'll see. But yeah, wait and see mode, guys. But yeah, that is everything. I'm not going to go through all the pairs. I've just gone through the main ones today. Yeah, this has been quite a long video, but I've gone through quite a lot there. So basically we are in wait and see mode till Wednesday, like I've said about 20 times already. Yeah, fundamentally, like I said, the fundamental chart is our North Star. So if you've ever got any doubts about which currencies to buy, if you've got any doubts at all, it's best to just stay out of the markets and not trade, and just wait, because there are periods in the markets, in Forex, in stocks, in gold indices. There are periods where the divergences aren't very strong and the markets get a bit choppy and it's very hard to trade. What you're really looking for essentially is strong versus weak. So you're looking for a country that's doing really badly versus a country that's doing well. So the last few months we had quite a lot of successful trades on NZD, JPY. JPY, the Japanese yen, the Bank of Japan are hiking rates. They're in their hiking cycle now. They've got high inflation. And New Zealand, they're in a recession. Their central banks are cutting rates. So every time that pair has come to a supply zone in the last few months, we have sold and we have made money from that. And we could have made a lot of money if we would have held a few of them trades a bit longer. But yeah, that's it, guys. This has been my first ever YouTube video, actually, so if I do sound a bit like I've not done this before, that's why, because I've literally never done this before. I hope this video was helpful. I'm going to try and do one of these videos every week, which is basically a weekly analysis video every week, and hopefully I can do some other trading videos that are helpful to you guys. But yeah, this is the way to trade. I mean, if you're ever confused about trading, and if you're new to trading and you're looking at these gurus online who are just promoting just technicals or a technical strategy that is just going off the price action, you're never going to understand, and you're never going to be a successful trader, because that is not how the professionals trade. You cannot trade just on the technicals, and I don't care what anyone says. If you just trade on the technicals and off price action, then maybe there's some people that can do it, but to me, if you're selling an asset and you don't even know why it's going up or going down, that's just madness to me. So yeah, hopefully I've sort of gone through, I've gone through the chart, I've gone through the data that's coming out, I've gone through a bit of the nuance that is going on at the minute in the markets with these tariffs. And honestly guys, these tariffs are very, very annoying to be honest. This is where politics gets in the way of trading the fundamentals, because the fundamentals really are quite simple. It's all about, like I said, strength versus weakness, central banks, which central banks cutting, which central banks hiking. However, when you throw into the mix a country that is, maybe a country's declare war on someone, that brings risk sentiment into it, that brings, the market sentiment sours, and then money flows into the safe havens. Or like now, for example, you've got Donald Trump with these tariffs, and it does throw a spanner in the works. So hopefully after Wednesday things will get a bit easier. And guys, it's not just me saying this, like I said before, Brent Donnelly, who is an ex-professional trader, wrote the book The Art of Currency Trading, which I'd highly recommend. Is a really, really good book on Forex trading. Even he said tariffs are untradeable. So some people might have got lucky this week, last week, some people might have made a bit of money, but to me it's just better to just be safe and just wait it out. So yeah, that's everything from me this week, guys. I hope you enjoyed the video. Feel free to comment any questions that you have on the video. Like and subscribe if you enjoyed it. I'm going to try and make these every week to help people. And take care, and I will see you guys in the next one. Thank you.